Hello traders, my name is Carl Woodhouse. I am the founder and head trader at a company called Trade Simple, Trade Smart. We are a London-based trading education company who specialise in advanced Fibonacci and harmonic pattern trading analysis, as well as forex bank manipulation trading. Now, what I want to show you today in this edition of Top Trending Chart Techniques are the exact strategies and techniques we use to trade what are referred to as retracements or corrections in the financial markets. Okay, now for those of you who may not know, retracements or corrections take place on all markets and all time frames and are simply temporary reversals in the direction of a market's price against the prevailing or dominant trend. Okay, so they are simply temporary reversals in the direction of a market's price that goes against the prevailing or dominant trend. Now, the idea is once the correction is over, the dominant trend will reassert itself and continue. Now, at Trade Simple, Trade Smart, we tend to trade primarily with the trend. Okay, so we are primarily trend traders. Now, what we have found is that by combining Fibonacci ratios and projections and using them in combination with pattern and trend analysis, we can identify high probability areas on the charts for the termination of these corrections or retracements. Now, what this allows us to do is then enter a trade at or near the start of a new trend. Okay, so how is this done? Well, typically we use a special combination of Elliot Wave analysis, harmonic pattern recognition, as well as Fibonacci price and time analysis. We would generally look at around 2 to 3 time frames when we are also looking at a setup. Now, what we do is once we found a potential trade, we will break the chart down into 4 distinct parts. The first being trend, the second pattern, the third price, and the fourth being time. Okay, so what does that mean? Well, in terms of trend, not only will we use the typical method of trend identification to work out our directional bias, such as moving averages or patterns of higher highs and higher lows, for example, but where possible, we will apply an Elliott Wave count to give us a clear picture as to the position and possible duration of the current trend. So in this example, we've gone back to a trade we done some time ago, but it proves to be an excellent example to the points that I want to get across to you. So in this example, we can see that we're in a clear downtrend and we have a retracement which is beginning to the upside. Now, in terms of our trend analysis, we can apply some moving averages, which will give us an indication as to the direction of the trend. So I'm going to plot the 50 and the 200. And also we can clearly see that we have a series of lower lows and lower highs. Okay, so that's pretty straightforward. Now, in terms of a Elliott Wave count, I'm not going to go into the intricate details of Elliott Wave analysis, but it's fair to say that we have 2 sets of criteria, one being the impulse wave and one being a correction. Now, in terms of an impulse wave, they will generally unfold in 5 waves. So once we get a 5 wave count within a trend, we will typically get a correction to the up or the downside. So in this example, we have wave 1, wave 2, wave 3, wave 4, and we have wave 5. So we know that the trend in this case is over and we have a retracement which is beginning to unfold. So the key here is that we want to be able to call the end of this retracement and then join the dominant downtrend once the correction has terminated. So once we've established the trend, we then move on to our second element, which is pattern. Now, in regards to pattern, we would generally look for what is called an AB equals CD or ABCD pattern, which will be well known to those of you who study and use Elliott Wave analysis. Now, we will also typically look for the common harmonic patterns, such as the bat, the butterfly, the Gartley, and also the crab. Okay, now the ABCD pattern is a free-waved or free-leg structure which can appear in all markets and all time frames and can be very often seen in price action that is retracing or correcting a dominant trend. Now, one thing to note for those people who trade harmonic patterns is that the AB equals CD, or the ABCD, is the core pattern in the majority of harmonic patterns. Okay, so whether you try to look for ABCDs or harmonics, the strategies that I'm going over now can be employed and utilized for both. Okay, so once we've identified a pattern, we will then look to apply a Fibonacci ratios to the price action of the particular market to look for high probability support and resistance areas where the identified pattern may terminate and the dominant trend reassert itself. Okay, so in this instance, we have the unfolding of an ABCD pattern. What we want to do is apply our Fibonacci ratios, and then we will look for a termination point. Now, what does that look like? Well, what we would tend to do is apply Fibonacci ratios using multiple anchor points or swing highs and lows which have been identified within the dominant trend that took place prior to the correction or retracement taking place. Okay, now once this is done, we will then look for a confluence of 3 or more ratios that fall together within a relatively narrow price range. All right, I'll say that again. We will look for a confluence of 3 or more ratios that fall together within a relatively narrow price range, and we refer to these as Fibonacci cluster zones. So what do they look like? Well, if I take my Fibonacci retracement tool and I'm going to plot my ratios from the beginning of the trend down to the end, and as you can see, we have the 0.236, the 0.382, the 50%, the 0.618, the 0.786, and the 0.886. Now we're going to repeat the same process from our second identified anchor point, and we're going to go from our second anchor point down to the end of the trend, and we plot those ratios. Now what you're beginning to see is we're seeing an overlap in our ratios. So in the three middle zones, we can see that we have an overlap of a 786 and a 0.618. We have a 50% and a 618, and we have a 50% and a 382. Now these ratios we call the outliers, and we can see that the correction has already surpassed these levels, so we can clear these up or delete them off the charts. Now in terms of our next anchor point, we're going to do the same, and we're going to plot from our third anchor point down to our end of our trend, and again we're going to delete the outliers. Now what begins to happen is we can see that we have a zone here where we have 3 ratios that have fallen together within a relatively narrow price range. Okay, now I can see that we have a 0.886, a 618, and also a 786. Now from this point, we're going to use our Fibonacci external retracements. Okay, so we're going to move now from our Fibonacci internal retracements to our Fibonacci external retracements. And the first external retracement we're going to use is within the correction, and we're going to measure from the top to the bottom of our swing high to low, and we're going to project our external retracements into our cluster zones. And as you can see, we have some overlaps. We have the 1.460 and the 1.618, which has joined our 50% and 618 internal retracement. And we also have the 2.240, which has joined our identified cluster zone. Now, before I make my final projections, which we refer to as symmetry or alternate price projections, I'm just going to clear the chart up just so that we can see the zones which we have established more clearly. So I'm going to get rid of these. Now, what I'm going to do now is I'm going to measure a low to high or high to low swing, and then we're going to project that from a swing low or swing high. So in this case, I'm going to take my symmetry tool. We're going to measure from the low to the high, and then we're going to project that from the most recent swing low. Okay, so I've simply measured a low to high swing, and I'm projecting it from the most recent swing low. And what this does, it projects two ratios, which is the 100% and the 1.618. Okay, so we can see that the 100% has joined our third established cluster zone, and our 0.618 has is some ways away from our cluster zone, so we can get rid of that. I'm also going to project the low to high of our 1 to 2 swing and project that, and we can see that the 0.618 has joined our first zone, and we also have a 1.618 which has joined our fourth. I'm going to look around for any more projections in which I can make, and I can make one more from this swing low to this swing high, and I'm going to project that also, and we can see that the 100% has come in at this zone around here. So what I'm going to do, I'm going to clear the chart up. Now what we're looking for is not just a confluence of the Fibonacci ratios, but any other what we call reinforcing factors to our zone. So this 100%, we have a 5, 8, 9.5. We can see that we have the 50% moving average, which has also come into that zone. Okay, so in terms of our zones, we have 4 established zones. Our first zone comes in at 509.63 at 519.04. Zone 2 is 528.07 at 538.64. Our third zone is 552.38 at 558.60. And our fourth and final zone comes in at around 572 at 589.5. Now, what the primary purpose of these Fibonacci cluster zones is that they will establish high probability areas for the price reversal of the correction or retracement. Okay, so what we do is once price action enters into these zones, we're going to be looking for evidence of a reversal, and then we're going to employ an entry technique to get us into the market once the reversal has been confirmed. Okay, so very simple and very straightforward. Now, once we've established the zones, we then move on to what we call Fibonacci time analysis. Now, time analysis is probably one of the most underused forms of analysis in all of technical trading. Now, there is some skepticism about it, but in terms of my experience and experience of my team, it's something that we cannot do without. Now, at its most advanced, we will apply Fibonacci to the axis of the time market, and we will measure the distance to say the low to lows and low to highs, or high to highs, an example. And what we will do is we will project the proportions of the distances out into the future. Okay, so sounds complicated and is a study unto itself, and that's why in terms of this example, I have a great tip for you and something in which you can employ straight away. Okay, now that is the vast majority of corrections or retracements against a dominant trend will take place between or after the 0.382 to the 0.618 retracement of the prior trend. Okay, now I know it's a mouthful, so I'm going to say it again. The vast majority of corrections and retracements against the dominant trend will take place between or after the 0.382 to 0.618 time retracement of the prior trend. So what does that look like on a chart? Well, it's very simple. Most charting packages will have a Fibonacci time retracement tool, and what you want to do is take the tool and you want to measure from the top of the trend right down to the bottom, and you simply want to project the 0.382 and the 0.618. Now, if you have a retracement or correction that seems to terminate before the 0.382, 9 times out of 10, it is a false reversal. Okay, so if you're looking at a harmonic pattern or an ABCD pattern and the market begins to reverse and it's before the 0.382, 9 times out of 10, it is a false reversal. Okay, and if there's one tip I can give you and that you learn from today, take that one away. All right, so in this example, I've plotted our Fibonacci time retracement, the 0.382 and the 0.618, and we are only going to look at employing an entry technique once price action has entered the time zone and also hit one of our Fibonacci cluster zones. Now, you will find that using these techniques can be remarkably accurate in terms of not just price, but also time. So what I want to do now is move the market on, and we're going to look at the behavior of price action as it enters into our cluster zones and also as it enters into the time range of our Fibonacci time retracements. So let's move the market on. And we can see that zone 2 at 528.07 to 538.64 has been entered. And now within 2 bars, our third zone has been entered. And look at that drop. So as we entered into our zone and we crossed into the area of the 0.382 and the 0.618 time retracement, we can see that the market went clearly up into our fourth zone, hit the 100% at 589 and a half, also the 50 moving average, and then look at the size of this rejection to the downside. Okay, so very powerful stuff, and this is something we see every day on all markets and all time frames, whether it be commodities, forex, or stocks, guys. So it's something that you should look at and definitely add to your trading arsenal. So in this case, the fourth zone at 572 at 589.50 would have been the zone, and this is a zone that we had established some time before the market reaching the area. Okay, so this style of trading is very predictive and not reactive. All right, so it's very predictive and not reactive. Now, once we see this type of price action against one of our identified Fibonacci cluster zones, we will simply employ one of our entry techniques. Okay, now obviously the idea behind the entry technique is to allow the market to enter us into the trade once the specific entry technique criteria has been met. Now at Trade Simple, Trade Smart, we use around 6 different entry techniques, and we also use a combination of multiple time frames to fine-tune our entries and get the best entry possible. Now obviously there's no time to teach you how all this is done, but needless to say, entry technique should be straightforward and objective. Okay, and in this case a simple trend line violation on the traded 5 time frame would be suffice. So if I grab my trend line tool, and we're going to draw the trend line from the beginning of the ABCD pattern And what we want to see is a violation of the trend line, and that will enter us into our trade. So I'm going to move the market on, and we can see that the unfolding price action is still within our cluster zones. And notice how the previous cluster zones are now acting as levels of support. Okay, so as we all know, resistance will change to support and support will change to resistance, and this is true when it comes to Fibonacci cluster zones. And at this point, we would be entering into our trade, and we can see that the price is around 466.57. Now, once a reversal has taken place and we've been triggered into the trade, one of the things we want to be aware of, if there's going to be any obstacles that may impede or stop the continuation of the rally or the downtrend. Okay, so what we want to ask ourselves is, are there any hidden or obvious support and resistance levels that price action may need to penetrate before the trend reassert itself? And if so, where are they? Okay, now we do this simply by projecting Fibonacci ratios using the same retracements, extensions and symmetry projections we use to create our Fibonacci cluster zones. The only difference being is that we project these from the correction. Okay, so what I'm going to do is I'm going to clear our chart up, and I'm just going to leave the zone which the reversal took place. And as we can see, we are now triggered into the trade. We want to see if there's going to be any significant hidden support and resistance levels that may impede the continuation of the trend. Okay, so again, I'm going to grab my Fibonacci retracement tool, and I'm going to identify my anchor points, and then I'm going to project my Fibonacci retracements. Okay, so we can see I've projected from the first anchor point, and now we're going to use the second. Okay, and I'm going to clear the zones that the price action has already penetrated, and then I'm going to grab my Fibonacci external retracement tool, and we're going to project down our external retracements, and then I'm also again going to use our symmetry trading tools. So we're going to take a high to a low, and we're going to measure that price action to the downside, or project it to the downside, and we're going to take this high to low and also project that to the downside. And again, we just simply want to identify a cluster zone. So if I clear away the ratios that don't fall together within a relatively narrow price range, and here we can see that we have quite a significant zone around here. So at 466 to 449, and then we have three ratios at 421 to 410. Now, there's a number of things you can do at these points, guys. One strategy is, once price actions reaches one of these cluster zones, is you can close 50% of the position and then move your stop to break even. Okay, and you would employ some kind of trailing stop technique once one of the cluster zones have been hit, so that the market will take you out of that 50% of the trade. The second being, which is very aggressive, is once the zone has been penetrated and price action has closed beyond the zone, is to open another position. Okay, so depending on the type of trader you are, and your risk appetite will be dependent on what you do at this level. Now, once price does penetrate this level, if and when it does, one of the things that we need to know is where our profit target zones are going to be. Okay, now in terms of price action, once it has penetrated the zones, what we have found is that the 1.272 and the 1.618 external retracement of the entire pattern generally prove to be significant support and resistance levels. Now, they're significant enough to the point that once price reaches these areas, there's a good chance that it may stop and even reverse the trend in which you are now trading. So these are very good levels to use as target or profit targets. Okay, so the 1.272 and the 1.618 external retracement of the entire pattern is where we will typically have our profit targets, target 1 and also target 2. Okay, so I'm going to move the market on, see if we penetrate the zones, and then if we do, we're going to project our 1.272 and 1.618 external retracement of the ABCD pattern, and ultimately they will be our profit target areas. So let's move the market on, and we can see that the zone has now been penetrated. Notice again how both of these new zones are proving to be significant levels of support. We can see that 421.78, which is the 0.786 ratio, is now proven to be a significant level of support. Now, these are levels that the majority of traders will be unaware of, guys. You know, those times where you see a market consolidate or begin to slow down or reverse like this just have, unless you're aware of these levels, most times it's going to prove to be a very big shock to you. Now, in this scenario, dependent on whether you have moved your stop and employed the 50% rule, you may or may not be stopped out. But what it does give you is a second opportunity to re-enter the trade. Okay, so in a scenario where we had taken 50% from the identified cluster zone and then move our stop to break even, if in the event we had been stopped out, we would simply employ the same strategy we employed when we identified the cluster zone in the first place. Okay, so the 572 to 589.50 again has proven to be a level of significant resistance, and we would simply repeat the same process, wait for our entry technique and re-enter the trade. Okay, so even if this does fail, the zones will allow you to re-enter the trade because they will still act as levels of support and resistance, and all you'll need to do is employ the same strategy to get in. So let's move the market on and let's see what the market does from this point. So we've hit our zone for the second time, and again we've come down into our levels of support that may impede the rally. And look at this, they've again acted as a significant level of support. Okay, we finally got through the second zone. So from here, what we're going to do is apply our 1.272 and 1.618 external retracements. And we're going to employ it from the new rally which took place, on the most recent rally that took place. And let's delete these. So we can see we have the 1.272 and 1.618 ratios, and this would be our first profit target, and the 1.618 would be our second. So I'm going to delete our group of ratios which we had identified. And once the market reaches our profit targets, we'll simply employ some kind of trailing stop technique to manage the execution of our profits. Okay, so I've hoped you've enjoyed what I've had to show you. Fibonacci trading in combination with Elliot Wave harmonic patterns is a very powerful trading strategy. It's something we have over 50 hours of material on over at Trade Simple, Trade Smart. And we would encourage everybody to be familiar with this trading style.